Welcome you to our YouTube channel PNJ Legal. We are 12-year-old law firm. On this YouTube channel, we are bringing lot of the complex legal topics to you. We are also presenting lot of business opportunities for the entrepreneurs to get ventured into.
It is an introductory slide. This slide reveals the topic of presentation. Now, introductory slide. With increasing globalization, multinational companies across the world are investing more and more in India, and as they go about establishing themselves, it is very crucial for them to understand India's tax structure and regulatory policies. Now, genesis for international taxation. International taxation is the study or determination of tax on a person or business subject to the laws of different countries, or the international aspects of an individual country's tax laws, as the case may be. Government usually limit the scope of their income taxation in some manner, territorial, or provide for offset to taxation relating to inter-alia income. Now, illustration of international taxation. Many government tax individuals and or enterprises on income. Such systems of taxation vary widely, and there are no broad general rules. These variations create the potential for double taxation, where the same income is taxed by different countries, and no taxation where income is not taxed by any country. And this image clearly perpetuates the working and need of international taxation. Now, types of international taxation. Residence taxation. Residents of the country are taxed on their worldwide, local and foreign income. Source-based taxation. Only local income from a source inside the country is taxed. Usually, non-residents are taxed only on their local income. Now, concept of double taxation, the high mast in international taxation. Double taxation is a tax principle referring to income taxes paid twice on the same source of the income. In current perspective, double taxation occurs in international trade or investment, when the same income is taxed in two different countries. Now, need for DTAA, Double Taxation Avoidance Treaty. To avoid the issue for international double taxation, countries around the world have signed hundreds of treaties for the avoidance of double taxation, often based on models provided by the Organization for Economic Cooperation and Development (OECD). Now, what is DTAA? DTAA is an agreement between two or more countries for resolving the issues of taxability of income and increase transparency to avoid tax evasion, and in turn to attain the following purposes: avoidance of double taxation of income, for recovery of income tax in both the countries, allocate rationally, equitable and fairly the taxing rights over a taxpayer's income between two states, encourage free flow of international trade and investment and technology, increase transparency. Now, taxability of foreign income. The income earned outside India will be subject to taxes on the basis of residential status. First resident, if resident, DTAA with foreign country exit, then the tax will be levied under Section 90 and 90A, the DTAA rate or the income tax rate, whichever is low. If DTAA does not exist, no taxes will be levied. Non-resident not subject to any taxes. Now, relief mechanism under DTAA. It is pertinent to mention relief is also given to the taxpayer by virtue of two different modes. Bilateral relief under Section 90 and 90A of Income Tax Act 1961 for taxpayers who have paid tax to a country in which India has signed DTAA, and unilateral relief under Section 91 of Income Tax Act 1961 provide relief to taxpayers who have paid tax to a country with which India has not signed DTAA. Now, chart for determination of residency of dual resident by tiebreaker rules. Sometimes a person becomes resident of two or more states. This creates confusion as to who will tax the global income, and various issues arise to his taxability. A person who is resident of two states by virtue of law is known as dual resident. The residency of such dual resident is known as dual residency. Which DTA? Ready to apply a triangular case dispute. Let us understand the above triangular case as on issue to DTAA by an example, as has been shown in this slide. There are three companies. They are X India, Y UK, Z Mauritius. X takes loans from Z. Z receives interest from X. Which treaty is applicable? First, Indo-Mauritius Treaty. Second, UK Mauritius Treaty. And third, Indo-UK Treaty. Now, first, treaty is applicable to the person resident in one or both the states. And second, person other than individual is a resident of state where its place effective on management is situated. First, Indo-Mauritius Treaty. Second, UK-Mauritius Treaty. And third, Indo-UK Treaty. Now, other important aspect of international taxation. GAAP, General Anti-Avoidance Rules, is a tool for checking aggressive tax planning, especially the transaction of business agreement which are entered into with the objective of avoiding tax. In taxation and accounting, transfer pricing refers to the rules method for pricing transaction within and between enterprise under common ownership or control. Now, OECD transfer pricing methods. Chapter 2 of the OECD Transfer Pricing Guidelines for Multinational Enterprises and Tax Administrations contains a discussion of 5 transfer pricing methods which consist in 3 traditional transaction methods. These 5 transfer pricing methods, as shown in this slide, represent the international consensus on the manner of applying the arm's length principle. Now, international tax advisory, the inclusions. The advisory on cross-border transaction and M&A transaction, advisory on applicability and availability of tax benefits under SEZ Policy, EOU and domestic tax laws, advisory on applicability and availability of tax benefits under the Comprehensive Economic Partnership Agreement (CEPA) and Free Trade Agreements (FTA) signed by India with other countries, advisory on corporate, withholding tax and personal income tax matters under the Domestic Act and tax treaties. This is the continuation of slide 16. Managing state-level taxes or compliances, foreign asset disclosures for expatriates working in India, advisory on advanced pricing arrangements for international taxations, payroll structuring including global salary and tax compliance for expatriates including income tax clearance certificate at time of relocation from India, advisory on value chain alignment (VCA) and international expansion services. This is the continuation of slide 17. Profit and cash repatriation planning for foreign establishment, advisory on equalization levy, assistance in compliance related to transfer pricing documentation including master file, local file and country by country report, transfer pricing advisory on complex structure and international taxations. Now, the Government of India providing complete guide on international taxation. For gaining an in-depth knowledge about the international taxation, please refer to the materials as has been uploaded by the Income Tax Department, Government of India by clicking the link as shown on the slide, and a web page similar to one shown in the image will open. Thank you for your valuable time and patient hearing.